Cool, guys. I think we have got all the guests who have joined, and also I think we've seen quite a few people trickle in. So I guess we can begin. Thank you all for joining again. Good morning, afternoon, evening, wherever you are. As you can see from the title of the spaces, it's called Decentralized Synergies because it's the all the protocols here. We're kind of Lego blocks, I believe, and we've all got synergies between us. So I thought it'd be great if we could just chat, have a chit chat about decentralized stables, get a bit of an intro into the different projects, what's planned in the roadmap, and also, we've got two protocols here who are non-USD denominated stablecoins. So also get their thoughts as to how they see that moving forward as we go. So without further ado, I think what would be best is if each of you could give a quick intro into your projects. But before that, let me just introduce to the people who's on the call. Myself, I'm head of growth. I'm Sam. I'm head of growth at Liquity. We've got Token Brice, who's the chief DeFi strategist at Liquity as well. We have got the GHO guys here today. Benjamin, who leads strategy at GHO, and Kila, who's the head of comms there. We've got Angle, who's the core head honcho at Angle Protocol. And we've also got Mimo DAO today, and we've got Starny and Alex representing Mimo DAO, Starny being the DeFi strategist, while Alex is the head of growth. So it's a pretty packed list of guests that I've got. So I guess what would be best is if I handed the stage to maybe Benjamin, if you could give a quick intro into GHO. First of all, congratulations on launching on mainnet. But also, if you can give a quick introduction into what Chi is about and what you guys do, that'd be great. And we'll do a quick roundtable with the others as well.
Awesome. Yeah, thanks. Yeah, we're super excited to be on Ethereum. I feel like, we've been so many chains and we've been kind of leaving Ethereum to the side. So a big homecoming for us. For those that don't know about GHO, GHO is a CDP stablecoin, so collateral-backed stablecoin, kind of like Liquity, and like MakerDAO. We don't charge interest. We take over 70 collaterals on like 10, 11 chains, and none of them are centralized collaterals.
Great. Pablo, maybe you can go next regarding Angle.
Yeah, sure. Thanks. Thanks for having me, guys. Hey, my name is Pablo. I'm a co-founder of the Angle Protocol. We have launched Aave GHO, a Euro stablecoin, live on the Ethereum mainnet on Optimism, Polygon, and Arbitrum. The way the protocol works is that it's over-collateralized. We're not fully CDP. We have different modules of smart contract which allow us to mint Aave GHO in a slightly more capital-efficient way, but we can work like a CDP protocol, like Liquity, GHO, and so on. So glad to be here today in the event.
Thanks for that, Pablo. Starny, would you like to go next and give us a bit of an intro into Mimo?
Yes, sir. Mimo has been created in 2021, then launched on Ethereum in April of the same year, followed by Polygon and Phantom. Mimo's goal is to create a decentralized and multi-chain Euro stablecoin to provide an alternative to USD stablecoins. And Mimo first had a conservative approach to the assets that collateralize par. The Mimo stablecoin with as collateral of wrap BTC, wrap ETH, and USDC. But recently, new collaterals have been accepted by the DAO, such as LUSD and RAI, but also CRV, Aave, BAL, and potentially others that will arrive later.
Fantastic. Thanks for that, Starny. And Brice, I guess, you can give a little bit of intro into us at Liquity.
Sure. So Liquity is still the only immutable lending protocol there is to be on Ethereum mainnet. So it provides a very strong guarantees to borrowers and holders of the stablecoin that it cannot be subject to any kind of censorship, being technically driven or by political reasons, let's say, like we've seen with the Tornado Cash events. So I'm working at Liquity to help better integrate LQTI and USD within DeFi. And yeah, cool news because we have joint projects essentially with all the projects that are part of this panel today. I'm sure we'll discuss them a bit further down the line.
Well, that's a great segue that you've led us on to, Brice. So I guess, obviously with the recent weeks, we've seen quite a bit of synergy between all the different projects. LUSD is obviously now available as collateral on both Mimo and Angle. We've got a My LUSD pool on Optimism as well. I guess we can begin on that side of things. Maybe Kila, if you can give a little bit of an intro into the My LUSD pool that you've got on Optimism and how your Optimism experience has really been so far.
Yeah, sure thing. The Optimism experience has been fantastic. I think the community on Optimism is growing quite a bit. The Optimism team has also been fantastic. We actually got quite a decent sized grant from Optimism, and so we've got some OP that we'll be using and giving out for a bunch of different objectives. And yeah, we have the My LUSD pool on Velindrome, which we are bribing, and you guys are voting for. I think you guys did a great job on getting a lot of kind of Velindrome voting power early on. Which, I mean, when you bet on a DEX early on and it does really well, you're going to do quite well. So you guys did a fantastic job on that token, Brice. I think you had a lot to do with that. Well done. Yeah, and then for we're one of the top kind of bribers on Velindrome. It's we see Optimism as being a big play for us, and so we want to do as much as we can to grow our to grow My on Optimism. On Optimism, you can use a lot of different collaterals to mint My natively. Some of them also being interest-bearing collaterals from Beefy. That was what we just launched, I think, was it last week? And it's doing tremendously well. For example, like Beefy collaterals, basically what Beefy does is you can deposit your ETH, it will take that ETH, put it into Aave and compound the rewards that Aave is giving you for your deposit. And so we accept that as collateral. And Beefy had, I think, like 100,000 in TVL for their ETH deposits. After we added them as collateral, that bumped up to like 2 million within like a week. So great ecosystem, a lot of real cool players to be playing with. And then, yeah, I mean, for us, we've got our, again, LUSD and My pool, which we want to continue to grow as it's a truly decentralized stablecoin pool. And that's kind of where we want to start moving towards in the future.
Yeah, it's amazing to hear. And indeed, this pool has been growing quite fast. I think it has now more votes than the main LUSD USDC pool we used to have. So the TVL should follow shortly. And just maybe for the listeners, another cool story on this pool is that so Liquity was included in the initial VLO airdrop. So we've received vote escrowed VLO token to vote on the go. And essentially our collaboration with May has been that our treasury vote on the pool with about 1 million VLO votes, while Kila bribes the pool. And so it worked really well to grow the TVL quite fast. But indeed, as they were noticing, the bribes were more impactful than our votes. So what we started doing just this morning is re-injecting the bribes into bribes for the pool. And so we just increased the bribes on that pool for another 2,500 keys. So I expect this week to be even better than the previous. But yeah, it's a cool example of how the bribing and voting can interact to grow a pool on such a protocol.
No, it's very, very cool indeed. And, what I guess, Kila, aren't my Cheetah is in like 22 different chains, isn't it?
Yeah, we're all over the place.
Yeah, and I guess
like little DeFi whores when it comes to chains.
but on top of that, I think, obviously yesterday I noticed the announcement go out. You guys are now live in Ethereum as well.
Correct.
What was I would say, you were, when I first, me personally, when I used you guys, it was back in the Polygon days, I guess probably a year ago or a little bit more than a year ago, and you've come a far way since. But my question to you is, what was the decision to come to Ethereum, and what do you guys plan to do on Ethereum now that you're on mainnet?
Yeah, I think it was a lot to do with as we were able to grow on all of these other chains, we were able to build up our network, build up kind of some brand identity, make friends that are also that have some clout within the Ethereum space. And so I mean I think one element is you don't want to go to a chain if you don't have any friends or partners on those chains. And so one of the big things for us is once we felt like we had a good amount of partners on Ethereum, then it would be a smart move to go, especially since like big money is on Ethereum. There's a lot of money that's rolling around on these different chains, but I mean, as you can see, the big money really is on the Ethereum chain. And so it was one of those things where I think things just kind of lined up well for us to launch now. And I mean, we're going to continue to add really cool collaterals. We just added some Yearn collaterals yesterday. So those are, again, interest-bearing collaterals where you're earning interest on your collateral assets, but then also you're taking a loan at 0% interest. So that's a pretty cool dynamic because your collateral grows as your debt remains the same. So it's kind of like a self-repaying loan in a sense. And we'll continue to add like unique collaterals as we grow. We continue to make partnerships everywhere we go. So you should see more and more partnerships coming out. We've got the LUSD and then my pool hopefully coming out on Curve pretty soon. I think Ben, our token Brice, might have a little bit more information on that.
Yeah, we're just discussing it this morning, actually. So we got a bit of a hurdle in the governance process, but everything is sorted out, and it's hard to give hard deadline when it comes to governance, but I'm confident we should have the Go up and running in the next few weeks.
Very exciting. I want to kind of focus our attention towards our other European guests here today. Pablo, I think, recently we had the LUSD pass-through governance as a form of collateral that can be used on Angle. Where do you see Angle going in the next, I guess, couple of months, really, now that you've got LUSD as a decentralized collateral that you can use? And, how do you see the future of Angle for the foreseeable few months?
So different answers to that question. The first answer regarding the collateral assets we want to accept. I think it's Starny who mentioned it, like in the first days of Mimo, you guys were pretty conservative in the collateral assets you were accepting. We are in the same phase. Like we used to be pretty conservative and now we'll accept more and more collateral assets. So we are working to accept like crvLP tokens and like tokens, yield-bearing tokens that bring you additional utility while holding them. Sometimes you are better off holding a staked 3CRV on Curve than just holding a USDC if you trust the Curve smart contracts. So we are working to incorporate these tokens as collateral, and this should make and we are working to make a leverage experience where you put your 3CRV, borrow AG euro, and then we swap the AG euro to 3CRV. Like we are working to create a super smooth experience so that you can get leverage on any yield-bearing asset without even noticing that you are getting leverage. So this is for what we're doing. We already have a cross-chain infrastructure like Shida. We don't mind about deploying the protocol on different chains, and we have a full bridge infrastructure that is set up. So we may deploy the protocol on new chains, but where comes the biggest where like our biggest plans for expansions is linked to like what we call the real world assets thing. Maker is spending a lot of time focusing on real world assets, and we are currently developing strategies so that people owning AG GHO could get a free non-Ponzi yield that is based on real world asset data. I cannot say much more at this point because it's still a work in progress. But essentially, when you are developing a decentralized stablecoin, you have to focus on the value you are really providing. Centralized, and I may be controversial on this, but centralized stablecoins are super efficient when it comes to on-ramping and off-ramping. Like it costs you $1 to get one USDC, and from one USDC you can get $1, provided that you have the Circle API, like the Circle KYC. And on our end, we know that we cannot compete with that with EuroC, the other centralized Euro stablecoin. So we are focusing on where can we provide a higher yield with AG GHO than with EuroC, or if we were to make a USD stablecoin, then with USDC. And this is the big issue we are tackling. We have some clues that we, in some ways, some contracts we're developing. But yeah, cannot say much more at this point since it's a work in progress.
No, that's very exciting. I look forward to seeing what innovation you guys come up with. Alex, for Mimo, I guess obviously you guys are also with the I think your stablecoin's called PAR. You have also recently added LUSD and Rise collateral. If you could give an insight as to what made you guys decide to kind of include these decentralized stables as part of your protocol, and what you guys see coming in the next few months.
Sure. So I'll let Starny talk about this. So if you want Starny to,
yeah. What is planned for Mimo? Firstly, tokenomics. Until the next tokenomics, Mimo is distributed in simple liquidity mining. So a proposal for tokenomic change has been drafted by Brice, who head of DeFi strategy, and is being finalized with the very last details. It will be published on the governance forum before the end of 2022. I can only tell you that Brice appreciates advanced tokenomics models to do something hopefully innovative. But we have also two new features that will arrive soon: Super Vault and Exception Vault. To make it short, Super Vault work in the same way as a classic Vault, but with additional tools such as the ability to adjust the leverage or depth and collateral rebalancing. It means switching from ETH Vault to BTC Vault in one transaction. There is also automated vault. It's tools to automate the vault. For the moment, there is only an automated rebalancing, but we could see other automation later. And the exception vault will be a vault that accepts any collateral, but the difference here is that the PAR will not be mint, but borrowed. That means if I have deposit ETH and minted PAR, I will be able to provide my PAR to someone who wants to borrow PAR against a currency that is not collateral on Mimo, and earn interest that this user will owe it to me. And prior to that, collateral's parameters will be defined by the user to not be tricked in the process.
That's very cool. Very interesting. I think one use case that I see for both you guys at Angle and Mimo, and this is coming more from a Liquity LUSD lens, I guess, is and I guess in a sense with Mai as well, we have kind of like a synergy here where if you have a specific use case, let's say you have ETH, you can use Liquity to borrow LUSD, and you can go to Angle or Mimo and borrow a Euro stable and then off-ramp that Euro stable coin onto the Euro currency itself. And with Mai, I guess it's similar, where we're both kind of decentralized in that sense, and you've got yield farming opportunities on both Ethereum layer 1 and layer 2. One question that I had, I guess, for both Angle and Mimo, let's go with Pablo Angle first, is what do you see like the euro stablecoin being a little bit getting more traction as the months go? And you see like it being, you can see already that with you two protocols, it's kind of growing. But do you see more and more traction being taken over the next few months?
I think we're really dependent here on the market macroeconomic conditions, and on the issue of the chicken and egg problem. You know, when you're launching a stablecoin, I guess you all know that you're launching a new standard, and no one has incentives to use your standard unless other people are using it. So all Euro stablecoins face this issue. And it was hard. It's still hard to grow Euro stablecoin in a market where everyone is thinking around the dollar, and when there are no strong network effects around euro-denominated stuff. So this is the issue we're facing, but this can be solved over time. Like, I'm pretty confident on this. And on the macro side, you know, the euro has lost quite a lot of momentum recently, particularly because the US Fed increased the interest rates faster than the European Central Bank did. But I guess that at some point, interest rates will converge and will peak, meaning that euro should be gaining a bit more traction. We're not there yet. I think we still have like 3 to 6 months, like difficult months to pass for the euro, and this means difficult months to pass as euro stablecoins, because if you don't believe in the euro, you don't want to hold euro stablecoins.
Good points. Starny, did you have any thoughts on the rise of euro stablecoins as well? And or do you see kind of do you have the same thoughts as Pablo regarding macro dictates things?
I think that Pablo have said everything about it, macroeconomic. For us, it's not illogical that the market is to see a large concentration of USD stablecoin at first, since the dollar has always been considered as the reference currency. But like everything in a parabolic way, we can see something. After a parabolic, it's always the inverse that happens. So we can see an euro that can be stronger than USD, but it's not for now. The macroeconomic for Europe is really bad for the moment.
Fair enough. I think next question that I have is more of a, I guess, a general question to everyone on the panel. What would you guys like to see next for decentralized stablecoins? We have obviously heard rumors about Curve coming out with a stablecoin. Aave is also obviously coming out with one as well. But at this token, Brice, do you have any thoughts as to what you would like to see with decentralized protocols and stablecoins move forward?
Well, more than what I would like to see, my wishes are one thing. It's more about where the space is heading. And to understand that, I would just follow the money, essentially. And what I mean by that is that stablecoins that are minted directly by a protocol, where borrowers pay an interest rate, are essentially the equivalent of a gold mine from a protocol revenues perspective. So I expect much, much more of this to come. And yeah, crvUSD and Aave GHO are prime example. It's still a bit unclear what will happen on crvUSD, but I expect it to be a tool to leverage your liquidity providing position on Curve. So it would prove synergistic to Curve itself. For Aave GHO, it's a bit easier to project oneself. And I actually kind of did some napkin math a few weeks ago to figure out like what kind of revenues it could draw. And yeah, the figures are quite impressive, and you understand why would Aave move that way. So if you take the most conservative estimates on both sides, which is like a relatively low market cap for an Aave stablecoin, so let's say Frax one, $1.5 billion, and then a very low interest rate, that would be 1% yearly, you are already at something like $66 million or something like that. I can't remember the exact figure, but like a significant amount of revenues. And this time it would be 100% paid out to the Aave DAO. So some of it will be used for liquidity mining and to support cause liquidity, of course. But I think that's a key difference, is to put it simply, when you borrow Go from Aave and when you borrow USDC from Aave, the situation for the protocol is vastly different in the sense that when you borrow Go, you're essentially returning 10 times more fee to Aave, because when you borrow USDC, most of what you pay as interest rate is used to pay the depositors, the people who supplied liquidity on the other side. But when you borrow Go, it's the protocol itself that supplies the liquidity. And so all the fees goes to the protocol directly. And the only cost the protocol have is essentially the cost of maintaining enough liquidity on the stablecoin. Anything else than that is pure profit for the protocol. So yeah, it's hard to project right now, but I don't expect Aave to need more than 1/4 or 1/3 of the total revenues generated from Go to sustain its liquidity, meaning that 2/3 of the total revenue is essentially pure profits for Aave stackers or whatever the Aave governance decide to do with it. So essentially the for-profit motive is driving pretty much all protocols with decent size to move forward this way. Now the question is how it would look like 6 months, a year from now, when all the top 10 DeFi protocols are either natively stablecoin emitter or grew into becoming one.
That's very interesting that you mentioned that. I do need to go and read through that napkin math that you did. Pablo, did you have any thoughts as to how you see the industry moving forward, on at least in the decentralized front as well?
I kind of agree with what Brice mentioned. Like, I think interest rates for borrowing stablecoins are going to converge to zero. Liquidity has been a pioneer in that. ChiDAO is also has zero interest rate loans. So convergence, there's going to be a convergence towards zero, and I feel that we will go in more evolved protocols that improve the borrower protection. And like, there are many different ways with which you can improve borrower protection in protocols that are mutable, so not liquidity. You can improve liquidation mechanisms. Like when you liquidate a vault, you could let everyone specify a callback function that can pull the funds to avoid the liquidation. These are the small kind of small UX improvements that we should see more and more, so that borrowers are more protected. And yeah, this is what I expect on the protocol design side. But on what the decentralized stablecoins do, I think the big evolutions are going to be framed are going to depend on the legal on the legal evolutions of the industry. We don't know what's going to be the status of centralized USD stablecoins. We kind of know how it's going to look like for centralized Euro stablecoins, even though it's pretty still blurry at this point. So the place decentralized stablecoins will take in the coming years is going to depend mostly on legal aspects. And then there is going to be also a huge aspect of who is able to provide the biggest yield, the biggest native yield on its stablecoins. And this is what will create tomorrow's long-term winners.
Thanks for that, Pablo. Ben, what thoughts do you have about where the space is going to go on the decentralized stablecoins front?
Yeah, I think it's very complicated. Two things I would focus on. One is like censorship resistant stablecoins. I think most major, like the big quote unquote decentralized stablecoins are like 80% USDC at least. And so like, I don't really put it beyond regulators to tap the brakes on some of these protocols. If regulation gets to that. And so we have to remember that DeFi is supposed to be censorship resistant. We're not going to make a lot of people in the traditional financial system happy by going against them, right? So we have to be ready for that. And I think not taking centralized assets is going to be very important. Although that's not where a lot of our pure stablecoins are going to. I think most stablecoins are going to go for the leveraging USDC, leveraging DAI or USDT, right? That's kind of like the easiest way of earning TVL. But then, how Pablo said as well, like interest rates are going to converge to zero. You saw MIM started, for example, charging interest rates, and now they're mostly 0% interest. So then you have to think about, is this model like sustainable long term if you're mostly stable coins? Because if I've levered an interest bearing stable coin, like 9x, if you have a really low CDR, then I'm not gonna ever repay it. Why would I repay it if I'm not paying interest and I'm earning a killer return? And so if you're not charging interest as an emitter of the stable coin, then how are you gonna sustain the liquidity that's being created from all this leverage? It's eventually going to catch up to you if you don't have enough collaterals that are volatile enough to like compel people to repay them every once in a while.
Yeah, I think you're right on the interest rates just converging to zero across the board. It'll be interesting to see what happens when some of these other protocols come out, but they're stable as well. It'll be a free for all, I bet. Starny, would like your thoughts as well as to what if you echo the thoughts that the others have said, or if you have your own as well, or Alex, one of you two.
Yeah, sure. So yeah, I do agree with what everything was said by Token Brice, Pablo, and Ben. In general, we think that in addition to being over collateralized with healthy assets, stablecoins must be involved in tokenomics models that are sufficiently advanced and attractive so that users will decide to mint one stablecoin over another. Given like the large amount of competition that exists, if users have no financial incentive to mint one stablecoin over another, they will probably never mint it. So this is one of the reasons why the new tokenomics that will be released soon at Mimo was designed. And this should naturally help to get more liquidity, which is obviously a crucial factor for a stablecoin.
It indeed is. Yeah. I guess, we're regarding like the general agenda that I had, I think we've kind of covered that all. I don't know if you guys had any questions for each other.
I actually have a good follow-up on the current discussion. Can I explain
for sure.
a bit, if you may? So this will be mostly for May Finance and for Angle and Mimo. So we were discussing GHO just a bit before, and one thing that was interesting to me in how they announced it is they got some pushback on the name. People asking like, why are you not calling it something like Aave USD or something with USD in the name? And the answer Stavi has provided on Starny has provided on the Go forum is pretty interesting. So I actually have it right before my eyes. He says, the reference to a currency has limitations over long term. Potentially, you might want to swap the peg from one underlying asset to another for various reasons, or track something else, and being bound to a USD in the ticker would be a limiting factor. And then he quotes Maker that has been using the DAI ticker, so not including USD in the name, for forever, essentially. So I thought this was an interesting angle, kind of hinting that GHO might not be forever pegged to USD. And I kind of wanted to extend this as a question to Angle and Mimo regarding the choice of a euro stable, because it seems like both protocols come at it from a different perspective, unless I'm mistaken. I feel like Angle is built to stomach essentially any kind of fiat, and euro was a bit of the first instance for Angle, when Mimo is more euro-focused by nature, the vision being to provide a euro-based CDP platform. Am I mistaken? And can you give us more outlook on this one?
No, you're right. The reason why we started Angle, I was getting yield on USD stablecoins, and then I thought it's too bad. It was late 2020. The dollar was decreasing with respect to the euro, and I thought we need to give opportunities for people wherever they are in the world to get yield in their home currency without having to care about change risk. So the initial vision was to make stablecoins pegged to almost any currency. We've just kept a euro focus so far. And my main focus right now is not creating stablecoins pegged to any currency. It's providing it's more providing sources of yield for people in their home currency without so that they don't have to care about change risk. And this is really the difference. And the other thing we realized, when launching AAVE GHO is that growing a stablecoin is super hard. And if you try to grow like 10 stablecoins at the same time, it's even harder. Like we could make 10 different stablecoins, and like the ShiDAO guys know that when deploying ShiDAO on a protocol on a new chain, you could go change the oracle, deploy a stablecoin pegged to something else as long as you have the deployment scripts. It doesn't cost you anything to create a new stablecoin. So we could do it, but if you look into CDP-based protocols, you don't have incentives to borrow a stablecoin if there is nothing you can do with it, and you even better, you don't have incentives to borrow something which is stronger than the euro, for instance. Like for me, it doesn't make sense to borrow. Like people saying I'm going to make inflation-resistant stablecoins, but who would borrow an inflation-resistant stablecoin? This type of stablecoin cannot work with CDP models. So yes, we can make stablecoins pegged to anything, but no one would use them in the first place. And before launching them, we are more focused in building the sources of yield and the ways for people, like the utility for the stablecoins before having the stablecoins in itself. But yeah, that's my point.
Interesting. Thanks for the context. What about you on Mimo's side? Can you chime in, Starny, maybe?
If you want, I can answer to that question.
Oh, go for it.
Sure. So actually, PAR was initially correlated with the previous name of the protocol, which was called the Parallel Protocol, before being called the Mimo Protocol. So PAR comes from this appellation from the protocol. But yeah, we do agree with what Starny said, and it makes more sense to have like uncorrelated names to really make the difference between what stablecoins really are compared to like typical fiat currencies. So
yeah, that makes sense. Kind of forgot about this first name. Yeah. Okay. To give some context as why it's called PAR.
Yep.
Cool. Did you guys have questions to each other? It's rare you have 4 protocols in one spaces. If not, we can have the guests chime in if you just request to speak, and you can ask a question as well.
While you're thinking about it, I just wanted to mention another cool benefit of the integration we have with LUSD and Mimo Placenga. Sorry, Key, but don't worry, we have many other cool things coming up on this front too. So it's essentially a flow to off-ramp from an ETH-based position, which is now made much more convenient, let's say, for European users. So before you had LUSD on Mimo or Anger, if you wanted to use Liquity to purchase something in the real world, you would essentially be using your ETH as collateral to borrow LUSD and then seek a way to off-ramp those LUSD, which means in front of at least the French tax regulation, a conversion event that is taxable between dollar to euro. Now that we have protocols like Mimo and Anger that allows you to borrow from LUSD and borrow euro, this flow becomes much simpler in that perspective, because essentially you open a trove on Liquity, borrow LUSD, and then with those LUSD open another trove on either Mimo or Anger, borrow either AAVE GHO or PAR, and then those can easily be off-ramp. Best flow would probably be through Jarvis Euro, and in that flow, you want off-ramping euros, so it makes the whole operation much more easy to manage. in a tax perspective. So that was a cool highlight worth mentioning.
Yeah, that's very cool.
Looking forward to the guy who will purchase the first house with this flow.
There will be one soon, I bet. So I see that there are, let's see if there's anyone who is asking any questions. So I guess, if you have any questions, guys, just please request to speak and I'll put you up to stage. Let's give it a few seconds. I don't see any requests, so I guess thanks everyone for joining. This is recorded, so we will be uploading this to YouTube as well, where you can you'll be able to play it back. But thank you all for joining today. Hopefully you learned a lot about the different projects and how we're working together, and also get an idea from the builders from the space to see what they think will be coming and how they see the space evolving. Thanks everyone for joining. Thank you for the guests as well for joining. And we'll speak again soon.
It was a pleasure. Thank you all.
Thank you for hosting the space.
Thanks, everyone. It was a pleasure to be here today. Bye-bye.
Bye-bye.